Good morning, ladies and gentlemen. Welcome back to Finews TV. Today, we are diving into a conversation on two transformative topics: digital assets and artificial intelligence. For some time now, we have been witnessing a profound shift in wealth creation, one that goes far beyond trends and speculative bubbles. This is a fundamental change in how we manage, grow and protect our assets, driven by AI and innovative investment strategies. I'm especially excited to introduce Pascal St-Jean, President and CEO of 3iQ, a leading investment fund manager focused on digital assets and disruptive technologies. Pascal, digital assets are the major focus of 3iQ. Could you walk us through your investment approach in this space?
Absolutely. So as pioneers in this space, being founded all the way in 2012, with that being said, trying to bring more access to the space in a safe, secure, simple way was always our mission statement. For those of you who may not know who 3iQ is, because we're based out of Canada, but with growing presence across the globe now, we were the first to launch a fully regulated exchange-traded product out in Canada, having worked with the regulators there over 3 years, from 2017 until 2020 when we got approval. And so that, when it comes to facilitating our approach to investing in digital assets, that's always been our philosophy. It's how do we work with regulators and the right counterparties? How do we look after the best interests of the investors, which means looking at the right assets within digital assets. It's an emerging space. I always talk about the web, the early web from the early 2000s. I was part of that as an entrepreneur 20 plus years ago. Emerging companies, IPOs, big names, a lot of hype. Which companies do I invest in? Which ones are going to be the Googles of the world? Which ones are going to be the pets.com that blow up, right? So there's still a lot of that fear and uncertainty in digital assets. And so yes, we work with, with regulators, we work with institutional counterparties, we work in the best interest of investors. And of course, our primary focus is ease of access. Again, ETFs, and why we're launching this product here with our partners, which I know we'll be talking about.
Right,
yes.
Exactly. But now, what are the trends that you see emerging in digital asset investing?
Absolutely. So with the success that we've seen with the ETFs and now globally, so we were the first to launch. I think you look at the global markets today, the US and Hong Kong have launched their ETFs this year. Australia, Europe in general, especially out of Switzerland, has a very mature market for digital assets. ETPs and AMCs are very common, and there's a lot of innovation happening here. Probably the most innovation coming from Switzerland, so it's great to see. So the next trends is the institutionalization of this space. And right now, a lot of the capital is still coming from retail, small family offices, et cetera. But how do we bring in the pensions? How do we bring in the sovereign funds? How do we bring in the large family offices and larger capital? That comes through next generation of investing in this space. And right now, there's still trends like the volatility in the space, the uncertainty. There's still a concern for some. Now, ETFs have helped with access. The regulatory clarity in global jurisdictions has helped give investor confidence that the regulation is becoming very clear. With that being said, there are still some trends like volatility and others. And so the birth of active management in the space is really the emerging trend that we're seeing. And this is why we're here, again, at the forefront of innovation, first to ETFs, now first launching a global managed account platform to bring the management of active strategies into the global market space to institutionalize the space.
That's very interesting.
Yes.
Is there anything happening in the digital asset space that isn't being talked about, but investors should know?
Two big things. Two big things that are not talked about much in the news these days, but as we travel globally, educating regulators, opening up new markets, talking to institutional investors. Again, the hype cycle that existed in 2020, 2021, now is in AI, right? Just like how there was hype in the .com era. After the hype fades in any innovative industry, there's still a lot of building that takes place. And sometimes investors who don't only read the news or don't follow the underground of the space kind of miss out of what's developing. So two big things that we're seeing happen. The first is the banking and custody around big banking around digital assets. So essentially what that means is that's going to bring more and more of the people who have adopted digital assets into traditional banking to make it more accessible to the traditional financial space. And so we are in talks with several banks in multiple regions who are now trying to discover what framework they're going to use, what technology they're going to use, but with clear visions of having custody of crypto within the next few years, and in some jurisdictions more advanced than others. Why that's a big deal is that with the custody in traditional systems, you could now have global accessible banking as a client, not having to worry about where do I bank for digital assets, where do I bank for my traditional assets. And so having one central spot that could bank you means that that will just grow the adoption of the space. And what we're going to see after that is these same institutions move into trading and into wealth management. And that's the other trend that we're seeing now, is more and more of the wealth managers in the traditional space, right, looking to incorporate digital assets into their model portfolios. And we're seeing the folks of Fidelity and others who are now injecting Bitcoin and other digital assets in their global macro portfolios. And so now you have investors globally investing with their wealth manager, investing in global macro ETFs who have exposure to Bitcoin and they don't even know they have exposure to Bitcoin. So those are the two big adoption trends: bankability of the asset class and injection into model portfolios.
You're now in Switzerland, and you recently announced a partnership with the Swiss asset manager Smart Wealth.
Yes.
Can you tell us more about this collaboration and what it aims to achieve?
So our biggest goal was to solve for some of the challenges that we see that when we hear and speak with investors. Like I mentioned, they talk about infrastructure risk. The FTX news from a few years ago is still in the back of their mind, right? They're looking for the next generation of trends. They're looking for ease of access. And so we did a three-way partnership with 3iQ, with Smart Wealth, and Gen2 to bring a net new innovation into the marketplace. And so again, like I was mentioning, the emergence of active management is allowing us to create really sophisticated portfolios that could bring to market products that are designed to lower volatility in the space, which is a big concern of investors. So how do I limit downside volatility while still gaining upside exposure? And so what 3iQ does is we've solved the infrastructure risk by basically working with the regulators across the globe, by working with institutionalized counterparties, custodians, prime brokers, et cetera, to bring what traditional markets are very common with. For example, tri-party agreements, credit lending on trading. So all the things that created FTX are now removed from the space. And so now the underlying of the ecosystem is very mature, very institutional, and 3iQ plays a very active role there. After that, we've brought in multiple managers and talent from across the globe on the active side. And then Smart Wealth is building the active portfolio to bring down volatility and to bring general multi-manager, multi-exposure. And Gen2 is wrapping it in an AMC structure, making it very easy to access for local investors. So I know I shared a lot there, but there's a lot of innovation packed into a product that ideally looks very simple on the outside, but is very sophisticated on the inside.
And who is the target clientele, and how do you tailor your offerings to meet their needs?
Yes. And so 3iQ, we'll talk about our clientele, and then I'll talk about the clientele for what we're launching here. So as a firm, as a global leader in digital asset investing, we've invested significant amount of capital to help bring institutions into the digital space. And so what that means is a lot of education and a lot of infrastructure and expertise that we now work with traditional institutions, traditional asset managers who want to come into digital assets. We work with crypto exchanges and digital platforms who have a lot of clients and a lot of digital assets, but are looking for asset management capability. So everyone is looking for expertise in digital asset management expertise, and we are the pioneers and the leaders. And so our clienteles tend to be these partners, these platforms that we integrate with, and so we're kind of the back end to a lot of this. And in the end, we bring, with our partners, sophisticated products to retail, to accredited investors, to family offices on a global scale. And so when we look at the product that we've launched here with Smart Wealth and with Gen2, that is the end target market, the accredited investor, the family office, the institution looking to either get into digital assets for their first time and are looking for the professional team that could help them come into that space, maybe get them to feel more comfortable with lower volatility exposure, and or the investor who already has exposure but is looking for the next innovative thing to increase their exposure in their portfolio.
the next innovative thing looking ahead? What are the next key priorities and milestones for 3iQ?
Yes, so for us, we recently were acquired by a global firm called Monex Group. And so a part of our strategy as we were trying to bring more institutions into the space, it's to be able to be partnered with someone that has a very large balance sheet that is known globally. So we were known as the pioneers, we were known as the innovators, and we still are. But having that big brother that is in the background, that's supporting of you, that has global presence, they have entities in the US, they have large presence in the Asian markets, they're expanding into Europe as well, and they're a large digital asset player in Japan. And so for us, joining the Monex family made a lot of sense. And so for us right now, we're very focused with them on exploring our go-to-market into Japan. We are working with the regulators there. As much as there is digital asset exposure, the regulatory bodies is still not fully determined. So there's a huge opportunity to expand the space in Japan. So that's a big priority for us this year. And also here, entering the European market through Switzerland with some acquisitions that we're exploring to do right now.
So I wish you all the best with these plans. Thank you very much for this exciting interview.
Thank you.
All the best.
Thank you so much for having us. Yeah.